I'm wearing my Josh Brown life vest here, uh, much like our friend Josh likes to wear on the halftime. Love you, Josh. This is 3 at 3, special St. Patrick's Day edition of 3 at 3. As you can see, doesn't have me on there. It has the leprechaun. And let's get the party started. So, what you need to know about 3 at 3 is that we always have to run these disclaimers. One of which is that this is presented for educational and informational purposes only. I am not offering investment advice. All investments do indeed involve risk. Now let's talk for a second about property rights. Yes, we have intellectual property. We have trademarks. We have patents. We have registered marks. And we have copyrights. We have all 4 of those things. So please, before you reproduce this in any fashion, ask us first. Thank you. All right, well, this is again from yesterday. CNBC contributor Jon Najarian says stimulus checks will go into Bitcoin, AMC, GameStop, Reddit stocks. Yeah, it'll do that. Again, the impetus here is, folks, that if you thought that $600 check got spent pretty quick in January, because it did. Look at January versus February. I mean, big time it got spent. How do you think $1,400 is going to work out? So we've got our eye on how the stimulus will be spent in stores, both online and bricks and mortar, as well as hopefully some reopening plays, some people perhaps buying airline tickets and cruise lines and that sort of thing, hotel rooms. But I think a lot of it will flow into low-priced cryptocurrency assets that people can more or less gamble with. I am a hodler of Bitcoin, not so much a hodler of some of the other cryptos. I trade them. But anyway, I encourage you, by the way, to check out our show, 10 a.m. Eastern Time every day, the Daily Crypto Bite. Chomp, chomp, chomp. All right. And there we've got a couple leprechauns. Fed, stronger economy, and higher inflation. Well, at least they didn't sugarcoat it. Yeah, we're going to see higher inflation, but no rate hikes. And for that reason, the Fed saying that calmed markets. The markets turned right around. You guys know the rest. It was party, party, party after that. Let's talk just a moment about that Daily Crypto Bites show. That airs 10 a.m. It streams live here on Twitter, on Facebook, on YouTube. And of course, you can subscribe to the Crypto Room, where we've got thousands of folks in there with those 2 young men that are crypto miners. And they have written the curriculum for our crypto trading courses. They have done a fabulous job. These guys really know what they're doing. You can check it out for $1 for the first month. $1 for the first month. Then if you like it, it's $29 after that. But you don't have to sign up for a year and then ask for your money back. You just send $1 and you're in. Then you decide if you want to join. Check it out. That's marketrebellion.com/try crypto. And let's talk about uranium stocks, because we talked about them already. I talked about it last week, and we already had a nice move out of that uranium stock that I talked about last week from Jackson Hole. Now Pete's in here trying to beat me, trying to say, hey, I got a better one. Cameco, CCJ. He was doing that one on the halftime report today. I guess they lost their upstream on their internet. So they were pulling down fine where Pete is down in Florida, but they couldn't push up fast enough, so they had to do the rest on the phone. Sorry about that. It's always better when Pete's on there live rather than just a picture of Pete with a phone call. But here's how the Cameco trade has worked out. As you see, it was 1868 when Pete cited it for unusual activity on the halftime report. He was talking about the April 22 calls. I wasn't buying those. I was buying the stock. Or I bought the stock, but I also bought the 19 calls. And then I'm selling upside calls. Why? Because look at that, 38,000. CCJ, you see there, April 22s. That's what Pete was talking about. Earlier today, it was 7,000 calls. Now 38,000 calls. So you think some institutions are getting in there? Because I sure do. And look at the open interest, 749 contracts. This is not all just rolling up from the 19s either, although 10,000 of those did trade against a 3,500 open interest. Both of those, all three in fact, the regular April 21s as well as other April 21s and those April 19s, all bought more than the open interest. So there it is, 1891. So watch this one, folks. Again, where was it? It was 1868. It's 1891 a little bit ago, half an hour ago. Up 1% on the day. $7.5 billion uranium play. Bang. And thank you, all of you, and I mean that sincerely, thank you, for subscribing to our YouTube channel. It is completely free to do so. We have thousands of videos up there. You can go to YouTube, type in Market Rebellion, and then you'll see the Market Rebellion website. We'd encourage you to click over there and subscribe. As you see that arrow pointing towards the far right of the screen there. If you click subscribe, you'll join 15,000 others because that's how many we are now. We've jumped over the 15,000 hurdle. Thank you. Much appreciated, folks. International Game Tech stock was $18.70. Both these stocks right around the same price, huh? 1868, 1870. Anyway, it was up 20 cents or 1% when Pete cited it for unusual activity. April 21 strike. Again, I buy closer to the money because that way I'm moving the odds into my favor. I'm not going to hit as big a home run on a straight, either a buyout or a huge jump in these options, but I want to play for the odds in my favor, not betting on home runs. Happy to have those home runs, but I'm also happy to put down, 70 cents and have it go to $3. I'm calling that a home run too, and that's the kind of trade I have on. There's the IGT trade, and there's the volume there, 21,000. I'm looking at that TOT column there, folks. 21,000 was the volume at that April 21 strike. You see they were buying April 20s, April 23s, both of those well over the open interest, and this one, the heaviest volume one, the 21 calls. So you decide how you want to trade it. I've already decided and placed my bet. Whoops. Let's see, there we go. Micron. So I like this a lot too. As you heard me say on the halftime report, because I answered a question about Micron, I like it. It's up 23% year to date. A lot of these high flyers, tech stocks, have not been able to hold on to those big gains. They might be going back to the well and bouncing, but this one has just been going from the lower left to the upper right pretty regular. Love that. They were buying the May 100 calls. Which calls do you think I bought? Tick, 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 tick. No, not the May 100s. I bought the May 95s. I still want to be in the same expiration generally as where the paper is because the paper is telling me time frame and strike. So I like getting in here and buying the 95s and selling an upside call against them and moving the odds into my favor that way. Again, you have to decide if that's appropriate for you. And there's the stock, 94.76. It's a $100 billion market cap. Been as high today as, what is that, 94.80. So it's just pennies off the high right now. Now let's do some questions, because you guys have questions. I don't dodge the hard questions. A gentleman out there was asking me a hard question. I am answering the hard question, and that is, what do you do when you're not making money on a trade? Well, let's look. Jason Wagner, J. Wagner 300, asks, can you show an example of a 3-at-3 trade that has not worked out and the discipline used to get out of the trade? I use INFY as an example of one that did not pan out that was on 3-at-3. I exited Monday. What is or was your exit plan for that one? I did the same, not on the same day, but INFY Infosys did not work out. I regularly cite that about 23% of the trades don't work out. We're hitting right around 77%. So, of course, I like my odds, but that's also why I try to stretch those odds into my favor as much as I can. It's also why I don't like buying those out of the money calls. I like buying an at the money call and selling an out of the money call because I take the risk down to just microscopic size by doing that. So, Jason, and I know he's being a nice guy asking this question, so I take no offense at all, sir. I am the first to admit not all trades work out. What do? My particular discipline is I sell the position if indeed it has not worked and it is working 50% against me. So as soon as a position, if I paid $1 and it's down to 50 cents, I'm out. If I paid $2 and it falls to $1, I'm out. If I paid $1.50 and it falls to 75 cents, I'm out. You get the idea. That's what I do, Jason. That's appropriate risk mitigation by me. You have to decide at what point you pull the trigger. Is it 25 cents? Is it 50 cents? Is it a straight out percentage like me? Again, that's up to you, sir. I can't tell you what to do. I can tell you I've been doing this now. This fall, it will be 40 years. I came down to Chicago September of 1981, right out of college, playing football for the Bears. When they figured out that Mike Singletary was better than me, which only took them 4 games, I came down to the trading pits, and I've been here since. Not always in the pits. First 20 some odd years I was. Now I trade from upstairs, just like most of you. So I think you got to cut your losses, let your winners run. When my winners double, I take off half. I snug up a stop underneath it, and I let it keep going. That's the way it works for me. That's how it's worked over the last 40 years. I'd encourage you to figure out the right discipline for you. And I applaud you, Jason, for cutting your loss and moving on to the next trade. That's the way smart traders do it. Let's now talk about averaging down. Bharat Patel, whose handle is at BHARATRPATEL 18. Bharat says, do you ever average down on your UOA trades if it goes down? Please take my question this time. Okay, happy to, sir. I don't dodge any of these, especially when it's new. As far as the audience, I want other people to learn the same way that you're learning, Bharat. So what do? I do not double down. The only way that I would double down is if we see a second round coming into that stock of unusual activity. Give you an example. Let's say that Micron was trading 95 and I bought the 95-100 spread like we talked about today. And it fell to 93 and maybe my call spread is shrinking to where I'm almost losing half. I'm ready to hit that exit button and all of a sudden another round of buying comes in. That might be a trigger for me to get a little bit more of a position on at whatever strike, whatever expiration they are then buying. But without that, no, I don't double down. I figure, okay, whoever made that bet made a bad bet. I'm not going to risk the rest of my capital that I allocate to any given trade on a double down situation. I don't do it at all. Let's talk about the tax deadline extended. Well, taxes are obsolete. We have a printing press now. Just cancel them forever. And that comes by way of Rust Cole. And he is at fake, FAKERUSTCOHLE. And as you see, he's using, I believe, Matthew McConaughey as his avatar. Taxes are obsolete, but they ain't going to do away with them, my friend. They're going to increase them. So those of you who live in high tax states, I pity you. I hope you're getting enough out of living in that state to make yourself feel better about all that money you're giving away instead of living in a state like Texas or Florida. Now, as soon as my youngest daughter is out of high school, which is next year, I will be out of this state and not paying Illinois taxes, which are about 4.9%. Instead, I'll be paying 0 at one of those Sunbelt areas where they do have 0 state tax. but can't really do it until then, unless my daughter decides to go to a private school in Florida or Texas or Nevada. So I am going to be here paying that 4.9%, but I would much prefer to be in one of those low tax or no tax states, and that's where I will be. But they're not canceling taxes, my friend. Sorry, they did push it out, but they didn't cancel them. And is that our last one? Let me see. It is. So that's our final question of the day. Hey, folks, I appreciate each and every one of you tuning in. Please share it with a friend. Go to check out Market Rebellion when you get a chance. Lots of great education, lots of subscriptions for stock, options, futures, as well as cryptocurrency. Go over there and check it out. I hope to see you back here tomorrow, and I'll be on the halftime report, noon Eastern time tomorrow from CNBC. See you then. Oh, it's good coffee. Bang.